Good afternoon, Maverick Traders. It must be Thursday because here I am. It's the 28th of April, finishing out, I should say, the first month of the second quarter, and what the second quarter it's been so far. Geez Louise, we're in the beginning, or midst, I should say, of earnings season, and we've got some disappointing numbers. And we've got a market that has actually been punishing some of those stocks. Guys, I got my 2 cents. This is opinion. Take responsibility for the outcome of whatever you decide to follow along with. You guys know the drill. Let's get into the market analysis because we actually got the bounce that we were expecting. Rob and Darren talked about this on Sunday, and I had to completely agree because after Friday's move to the downside, we expected a little bit of follow through come Monday, Tuesday, maybe even Wednesday, Thursday, whatever. However, we expected a bounce maybe on Tuesday. It didn't happen Tuesday. It actually consolidated, dropped a little bit more on Wednesday, but today showed a little bit more of a bounce. The Dow, the S&P, the Nasdaq, all higher. Nasdaq 3%, 2.5% on the S&P, and the Dow just shy of 2%. The Russells, the oil and gold, everything bounced, and it's kind of interesting because everything was actually falling. It had a lot to do with kind of some of the earnings announcements, but overall it was just a general market sell-off. And there's not much more past that. Was there any sort of catalyst? No. It was kind of anticipated. It was something that was expected along the lines of what the markets have been doing, especially considering the rally that we had in the beginning of March. It's one of those things where it's like, okay, we had a huge rally. The first quarter of 2022 was outstanding when it comes to market performance, especially when we came down the beginning of the year, so it came climbing back. However, there's not much to build off, meaning these companies that have been leading the way over the last couple of years are falling short. So now we're left with, where do we put our money? Where's the market's going to go from here? Inflation's still a problem. We have a product supply chain problem for sure, especially with the new import-export number that just came out, the lowest or the biggest detriment in history of 1.25 billion, the largest. And it could be a number of things. It could be the fact that the supply chain has been choked off, or another round of COVID hit China, and China's kind of squeezed their exports, so we're not getting things in a timely manner. I don't care what it is a pretty detrimental number, which should be, we're going to have to deal with this down the road. So, expected bounce on strong resistance levels, that's exactly what we got. I'm just going to keep it as far as price action. Advanced decline line, 72% bounced, 24% didn't. I'm going to say that 50-day moving average above or below, 75% are still below, 25% are above. Now, one thing that I didn't add, and I want you guys to check out, new lows versus new highs is literally 4% new highs and 96% new lows. So, this representation of this beautiful heat map we have here, as I get to it, we'll get to it in a second, of green, doesn't represent everything. It is a bounce to this point. Now, volatility came down, sure. Movement went up, great. Volume, you can see, didn't really follow suit. This was expected. It's not like we're up at 440, 450, 460. It's just an oversold bounce. And yes, here we are at the 430, which is actually resistance from 2022's January, right? Take a look at that towards the end of January with all these shadows. Let me go ahead and get my pin out, folks, because I don't want you to really squint. All right, let's just take right through here. And that's exactly where we're at. So it's not like we blew through the 440 mark, 450. It's not like volatility has come catastrophically down. We're still in the midst of earnings season, which, folks, I'm looking at some numbers right now. I'll give it to you here in a second that aren't conducive of a bullish market. Now, I don't want to be super pessimistic, but folks, I want you to understand that the belief or the ideology or even the expectations of this need to be put to bed. And the reason why I'm saying that is because we are in a different situation economically today than we were back then. All right? So when you've got a company that's expected to post a bunch of numbers, you think they're going to be great, so on and so forth, you can buy into it. But when the numbers come out and they're not that good, then we're not going to get that oomph that we saw in the past. It doesn't mean that that the markets aren't going to continue higher. Maybe retest the 340 marks, 350 marks. I'm on the Qs now, folks. However, coming back and breaking, trends that we saw at the beginning of the year, I just don't think the markets have it in them. fundamentally, absolutely they don't. And moving forward as an economy, if we can continue to put money back into it, then maybe we can sustain it for a little while. But once again, these bubbles have to deflate. I don't want to say pop, but they have to deflate. And it would be nicer to see it deflate than pop. So, this is a bounce. It's a good bounce, and it's an expected bounce. How long is it going to go? I don't know. I don't really care, but I'm going to treat it as a bounce. Let's get to the heat map and take a look, folks. Everything bounced. Everything was red the last week. Everything is now green today. From energy all the way to technology, communication services, which has been a dog of late. Let's throw Comcast out, the 1.19% drop. I mean, that's got to be news specific. But when everything bounces, this is a general surge or short cover rally, bottom fishing, you guys name it. But it is not trend changing, and please do not try to catch this falling knife. That's all it is. So what do I got? I'm playing the chart. It broke below the moving averages, below the 20-day, below the 50. 20-50 slope is turned over. A price action. It did bounce, so I'll give you that. I'm going to go 0 on my weekly outlook, but I'm still -2, -1.5 at most optimistic for the monthly outlook because we are setting that low, and we got there relatively quickly. Folks, understand that it did take from the beginning of 2022, we had a rally back up to the 450 level. We tested it, retested the falling 20-day moving average, fell back, so on and so forth. This last fall that we've seen over the last 6 days is directly down to support and the lowest levels we've seen since the beginning of the year. Even the lowest levels of, I dare say 2021 or 2021. So here we are, but we don't have the optimism behind it. We have rising interest rates, rising inflation. We've got a hawkish Fed. We've got a slowdown in housing. We're starting to see a supply chain chokehold. There is so much pessimism that I don't really want to buy anything up to the 450 mark. I'm thinking that we're going to rally back up there. However, we're still strong enough to keep these levels. I said this yesterday on the Wednesday update. I'm going to say it again. We're going to need some sort of a bad news to actually break down and fall apart and for that VIX to spike. Right now, we're just uncomfortable. And I like to use that word because I don't see a massive sell-off. I do see selling, but not a sell-off. And that's kind of what I'm expecting. That being said, folks, some of the news coming out on these earnings is really bad. So I don't have too much for you today. I got Coca-Cola, I got PG, I've got KDP, which is awesome. KDP was actually pretty cool. It's Keurig Dr Pepper. It's a sideways trade. It had earnings today, and it didn't move anywhere, which is kind of cool. So let's start with Coca-Cola here. I love the fact that it moved lower with the rest of the markets, but it came all the way back to close pretty much at the highs of the previous day. Higher than where it closed yesterday, but not, but once again, trying to get back above the highs it set for the last couple of days. So I do like Coke. I think it's going to be a cool trade, sideways to up moving forward if you guys want to go ahead and play it. Here's P&G, Procter Gamble. Beautiful confirmation of a lower pivot or a pivot low off of support of 160, touching that 160 moving average, or 20-day moving average at 160, moving higher. If you're a little reluctant, thinking that, geez, Joe, I think this is a one-day thing, when it comes to the bounce of the overall markets, we'll go ahead and wait. If this gets above 164, sustains itself, for you slow players, 165, 166 might be a better move, a better entry point if you want to go into May, deep May, early June, mid-June. Here is Keurig Dr Pepper Inc. We talked about this yesterday. This has been sideways trade for a while. And what's really cool is we talked about it yesterday, and the conversation was it's still sideways, although it has earnings. So chances are it's going to break above or below. So if it gets above 39, buy it. If it gets below 36.5, sell it. Or, and we talked about this suggestion, you could play the fact that it won't go outside of it. What's really cool is when you play some of these iron condors, 39, 39.5, 37, 36.5, or whatever you want to do, something in a range or some sort of credit spread. You could play directional, up or down. You can bring in a lot of credit or premium due to the fact that the volatility is high because of its announcement. And in this situation, it didn't go anywhere. Isn't that funny? It actually gapped down. So if you guys take a look at this, it actually gapped down and opened here on the low, or excuse me, at 37 and 37 dollars, 37.37. Went lower, then it went all the way up and closed at 37.99. So it was an inside day based on that much movement. And when that much volatility goes nowhere, it relates to a really good chunk of change when it comes to premium. So fun. Tough one to play. It's really difficult to play sideways through earnings when you expect something that's been consolidating and thinking that, oh, this is going to break up or down. It takes cojones, but if the payoff's there, the risk reward's there, they can be fun. All right, that's kind of a fun trade for the day. So, guys, tomorrow's outlook. The expected bounce at support happened. There's no news to sustain the bounce. It's nothing but. It's not like the war's over in Ukraine. It's not like interest rates are coming down. We've hit a peak. There's nothing really positive to go with the bounce other than the fact that we were oversold and we were destined to do so. So I'm going to keep it as nothing but just a bounce. So earnings remain neutral to bearish. I am looking at Apple, Amazon, and Intel right now, folks. Apple is up slightly. Apple's about 2.5% so far. Once again, these just came out. Amazon looks like they missed. They're down about 9, just over 9. Intel's down about 4.5 right now. So Amazon missed, Intel missed, Apple is beat revenue. So we'll see. We've got ExxonMobil, ABBV, Bristol Myers. We got all sorts of stuff coming up, folks, over the next few days. So we'll see what these bigwigs here do when it comes to the markets moving forward. Understand, guys, a lot of this can be absorbed by the markets and just ignored. And so Amazon will get punished, but the markets can continue to bounce. So keep that in mind. However, guys, when it comes to your long-term outlooks, understand that you're trading the market in front of you. We had a pretty catastrophic move to the downside this week from Friday. I don't know what is out there that's going to turn everything around and say it's okay. We're going to go back up to previous highs from January, March. I don't know how we get there, so just be cautious. That's all I got to say. All right, guys, thanks for joining me. We'll talk to you next time. Thanks. Bye, everyone.